Hello, everyone. We are live, and I am with not one, but two of the biggest names in the high yield space, Jay and Sylvia. They really don't need any introduction, but I'll let them say hi and, say what's on their mind, what's the latest and greatest. I'll let Sylvia go first. Ladies first, right?
Yeah, sure. Hi, glad to be here. Glad to be here again. Thanks for having me. Excited. And yeah, there's a lot of great stuff going on. So hopefully we'll talk about some of it today.
Yeah, thanks for having me back, Mr. Retire on Dividends. You know, Sylvia, when we talked about coming on the video today, we were going to really give you a hard time, but I think we got too busy to really coordinate how to really bust your chops. So
Bring it.
We're always happy.
He's probably ready to bust our chops.
Yeah.
I know you're a Jersey guy. You could take it. We're all good with that. I get it. So
Yeah.
no, it's good to be back. And Sylvia, it's our first together here, right? So.
Yeah, I figured I'd ask, and you guys said okay, so it works out perfect.
Yeah.
So that being said, you're both obviously involved in the Defiance ETFs, and breaking news happened not that long ago with both YieldMax and Defiance. So Defiance, QQQY, JEPY, IWMY has a prospectus. It's on the website now, and they're now going to pay weekly. There's a couple changes there. There's a name change to JEPY. I want to talk about that if you don't mind. And then obviously you're changing to weekly, and the name change to 0 DTE on top of the daily goal of 0.15%. So not sure. I guess I'll start with the name change, the ETF change. I'm just curious on that. Why the name change on JEPY and then just JEPY to WDTE, I believe.
That's actually something that we can't talk about.
Okay.
Yeah,
I have a guess.
Yeah, you can get you can guess your guess.
Okay, my guess is JEPI has something to do with it, but
could be right. You could be right, but nevertheless, it will also reflect the fact that we're making this big change to paying a weekly distribution. So WDTE fits well with weekly distribution on S&P 500, and the other tickers didn't have issues similar to some of the things you might be thinking about. So yeah, they're going to be the same.
Okay. So the 0 DTE, previously, I guess we can call it 1 DTE. Now it's changed that you could do 0 DTE. Is that in effect now, or is that starting a certain date? Because I know the prospectus is filed. It's on the website. Is that in motion? What's happening with that?
Yeah, you want to take that one, Sylvia?
Yeah, sure. So the prospectus that's filed, the update to the prospectus goes effective on September 26th. And basically on that date or any time after, we are able to, but do not have to, employ the strategies that we list on the prospectus. So it just basically opens up and gives us, the opportunity to use 1 DTE, 0 DTE. Although Jay and I have a theory about this in terms that it's not kind of like not a real thing, and it's become like a little bit of a manufactured marketing term. But basically, we can use these short-term put options that expire within 24 hours, or right at 24 hours, or after a few hours, and it'll just basically allow us to do both. We just defined it.
Yeah, we always had the ability to do this, right? Yeah. This is not a new tactic for us. Actually, I think the original prospectus said a week or less, and we know we were going to go every day. Like we knew we were going to do the 1 day, closing trade to the next closing day. All of a sudden, and by the way, this is like a year now. Like the fund's been out a year. I remember right when this happened, and everybody was like, "Wow, first 0 DTE fund," and then maybe it is, maybe it isn't. It really, like you said, Sylvia, you're right. It's a manufactured marketing term. Like there's no it's not like an official options term, right? But it has become this thing that is morphed recently into a term that would insinuate the day of expiration. So versus, less than 24 hours. And so, we've always had that ability to do it. We have done these, by the way, from time to time. We'll just do them a lot more frequently now, when it makes sense to do it. The tactic that we use today captures a lot more time value because you get the overnight volatility and the same day volatility, right? When you look at what we sell each day in the time value, I think you pointed out before, the prospectus changed a little bit. I'll talk about that one in a minute. But if you look, you get more juice holding the overnight option, right? There's two kind of quasi sessions that happen pre-market and during market, and that's baked into the options. When you only do a same day option, you miss all the juice of the overnight, right? So for us, when we tested this, the overnight always made sense to capture, right? So, but that's okay. We think this is a term that's interesting to investors that might want to have trades that happen the same day. So that'll happen from time to time now, and it's not mandatory, but it's in there, it's in the title, it's going to happen.
So I know you get more juice going through the overnight, but I don't. You probably know this. Historically, were there, after hours and pre-market, aren't there more gains than losses overall, where you could essentially, when you don't have, I guess, the option in place, couldn't you capitalize on that? Or I guess Defiance is maybe a little different because they don't have
the point of these funds, right? QQY, the new ticker, which I don't think I even want to recognize it, but I at some point I'm going to have to, Sylvia, I guess. And I never know why. The point of these was always capture time value, right? It was always a volatility play. It was always a time harvesting play. So we lean towards that. When you look at some of the other funds that do same day trades or 1 day trades, they're more growth oriented, right? Selling 5 delta, 10 delta, 14, 15 delta options. You're not capturing much income, right? Whereas ours is more, and look, if you want growth, we got 2 other funds for that, SPYT, QQT, like those are growth oriented, and they're more about, get a little income as a kicker, but still capture growth. The original, the income Defiance funds that Sylvia and I put out were more around harvesting volatility. That was it, right? We debated, don't even do any in the money, just do the at the money. But the math works out that it's better to do that, slightly in the money put, capture the time value, capture a little upside, and that's it. It was never more about growth. We have 2 other funds for that.
So 0.25% daily would be in the money. Is 0.15% still in the money slightly, or
still even more? But let me address that change. So the move to weekly is the thing that formed that, right? And formed that decision. So when we had a month to average out the volatility, I'd always catch a CPI in there, a GDP, a job number, right? We maybe even a Fed meeting, right? So we'd always be able to average 25 basis points over the month. But now that we've shrunk the range to a week, we may not always get more than, the 25 bips per day, because it just might be a boring week, right? No earnings, no news, right? I mean, this might be one of those kind of like snooze. I know we get a GDP number this week, but okay, might not be a lot of information that comes out this week. And so you can only sell and capture 15 bips a day. So we're not changing the in the money amount, right? We're still sticking with that 60 delta as our target for the overnight trade, but it just may not have as much volatility in that 5-day period. That was it.
Okay. And on the note of weekly, there's no payment schedule. Can we expect that to be posted on the 26th? And do you know what the payment day will be? Will it be Friday? And is it for the puts from the prior week?
Yeah, we'll announce that soon.
We'll have to announce that. Yeah, but look, I mean, you guys you're obviously paying attention here, right? So when do we have our normal announcement? Right, it's coming up at the end of this month. Yeah. Pretty sure you'll hear information before that.
Okay.
Yeah.
All righty. So, changing topics real quick. Ulti is a hot topic lately, Jay. I'm sure you know. So a lot of people want to know, the plans for Ulti, and they want to guess when. I know you said maybe around 30 days in the prior interview. Any update to that, when we can actually see the prospectus and the updates to the Ulti changes? Prospectus
is filed already. That's been in. Now we're We had a 60-day hold period before we can make any of those changes. So the tactics will begin to change beginning in the middle of October. So still got another, whatever, three and a half weeks to go here. Before that, providing there's no pushback from the SEC. So I don't know how many questions they'll have, but it was a pretty major change going from just selling, the cover calls or the synthetic cover calls to adding all those other option tactics. So you have to give it a little time. You have to file it. It needs to be reviewed. It was not like the change that we did with Sylvia here, where it was like, okay, we're going to add 0 DTE. We're going to change the ticker. Like those things are minor. If we change the tactics, Sylvia, right, we would then have to file and probably go through a 60-day period. If we decided to do things like, hey, we want to buy a put, or hey, we want to do upside calls. Like if we wanted to add, significantly different tactics to the Defiance funds, and we would have to do the same thing. So yeah, ultimately just got to give it another 3.5 weeks. You'll start to see some changes in that portfolio.
So it's filed. So that means it's public then, right?
Sure.
Oh, okay. All right.
Yeah. All the changes are there. Basically, it's like we basically gave ourselves the ability to do anything that was income based that included options. So, but even at times spend some money like on debits for protection, but still ultimately generating a credit. So that is definitely, Ulti is all filed.
Here's my money, Jay. Play options and make us money, right?
There you go. It's almost like a hedge fund at this point, right? Yeah.
I like it. Question about MSTR inverse ETF. But first, I was looking, Sylvia, I just want to say congrats. MSTX is your largest fund. Is that true? In total net assets?
Yeah.
That's a new fund, right?
Yeah. It's yep. It's a couple weeks old. More than a couple weeks old now, I guess. But
yeah, it overtook QTUM and QQQY. So
yeah.
I was surprised when I saw that.
People like leverage.
Yeah, I'm one of them.
But Sylvia has so much experience on the leverage side. I don't know if you guys know that. Sylvia, do you want to give a little bit of your experience on the leverage side of the world?
Direction.
Yeah, the direction. That's kind of my bread and butter. But I spent more than a decade at Direction working on levered inverse ETFs, and then before that, I was actually trading the swaps and working on a Delta One desk with a levered inverse ETF provider, which is kind of how I got the job at Direction. But it's been. It almost feels like putting on your most comfortable pair of running shoes that you've worn for the last decade. So it's good. But there is a inverse ETF. It's SMST. We have both, and that has some assets in it too. So you've got MSTX and SMST.
Okay, so you have the bear version of MSTX.
Yeah, we do. Yep.
Yeah. All right. I think the question was probably about the inverse of MSTY version of MSTR.
Oh, a YieldMax.
I'm not sure.
Either way. Very sorry.
Yeah.
But it's good.
We're all over this stock doing it, right? So
yeah.
Have not filed for any new sets of inverses for YieldMax.
Okay.
I don't know if that answers the plans or not, but we just haven't filed anything yet. So even if we wanted to do
the
it,
answer.
Yeah.
Well, I guess a follow-up is, are you? All right. Next. This is for Sylvia. When will we get, thank you for being here. When will we get IWMT?
Thank you for having me. It's on the list. It's on the list of the funds that we would like to launch. So, TBD. We kind of had this wave of inverse products that we wanted to get out first, and now we're back to the drawing board with our next set of launches.
Yeah, I think, I don't know how you feel about this, Sylvia, but I think if we've been probably a little disappointed on the uptake on the QQQT, right? SPYT has been doing well, 50 million in that fund. Yes, it's not, MSTX, but it's still growing. And I think overall, the long run, that fund has, I've said this multiple times, that fund has so much potential for both NAV stability and the regular distribution, that 20% target. I don't know why QQQT has had less pickup. You'd think something that has potentially more beta, more growth associated with it, like the Qs, you might see more uptake on that. I was always a fan of IWMT, as Sylvia was, but it also people have to want it. It's great to hear somebody that wants it, but we need, it has to make sense. right?
Yeah.
To add that to the roster.
Well, to be fair, I think Spy T, it took a while to build that one up, right? So these don't have the boom yield, right? I don't think you're going to have the big money.
How
right
boring! Only 20%.
Exactly.
I know.
How dare you? 20%. But I think in time it'll probably catch up. I think IWMT will probably do better than QQQT though.
Why do you think that?
I don't know. People love the Russell. Well, and to me, I guess it is a little more volatile, from what I could tell at least. But
sure, yeah.
So,
but it won't be more of a dividend, right? It'll just be more upside capture.
Oh
right?
yeah.
The target is the target. So,
which leads us to this question. What happens to the additional premiums you make over the 20% that you pay out on the tees?
We only sell options to make the 20%, right? So it's not like in QZ or any of the YieldMaxes, right? This one is we limit the spread to only make the 8 to 10 basis points per day, right? So we deliberately don't cap. We want to let the fund run as much as it can, but only sell. So there really isn't any excess. You might have some maybe there was a day where we overlapped on the spreads, right? So both made money, and then the next day none made money. It's like it could get that way a little bit, but really we don't sell for more than the 20%. So there is no excess. It's the rest of it is all left to capture upside.
I did not know that. Okay.
Yeah.
And these questions, I'm sure you're going to be used to it, but we're jumping back and forth. YieldMax Defiance, YieldMax Defiance. So since payments, you kind of answered this, I think maybe previously, B, C, and D funds are, I guess since they have a longer schedule of earning premiums, if there is excess funds, well, actually, what's the question? Do the funds close on the usual date, but they are delaying some payments? So yeah, are you gathering all of the premium income up into the new declaration date for especially like Group D, right? All of that premium that's earned goes into that next payment, most likely, or?
Yeah, so this is about the YieldMax groups and that
Yes.
They're now broken out. So they're staggered. So a different one will pay, different group will pay each week. And so that we end up having weekly. The answer is like eventually we have to distribute all of the yield that we earn right from selling the options. I can't declare what those are going to be, but I think everybody should know us. Our goal is to distribute what we make from selling calls. So if it's a 6-week, 7-week period that a fund may go without having a distribution, it seems reasonable that you should expect that to be made up. And when they finally catch up. And this is a weird transition. Once we're on the regular, schedule, it'll be fine.
And YieldMax, I was just curious on
Thanks,
this
Paul.
myself. YieldMax declared their distribution. Is that going to be the same over the next 2 weeks, or are you going to declare different amounts?
I mean, I think it'll be fairly similar. It depends on YieldMax's price itself, but the dollars received are already in the bank, right? We already got them. We're just kind of splitting up so it could go weekly. So so it'll probably be similar for the next couple of weeks, and then on that fourth one, you're going to be including Group A in there.
Okay. I was actually thinking this, so I'm glad someone asked it. Could you do 50% overnight and 50% same day? So 50% 0 DTE, 50% 1 DTE.
We absolutely could.
You can do whatever you want.
I would tell you it's something we thought about, and it's something that we're testing and taking a look at. Is there a benefit? Ultimately, we still believe the first trade was the better for the time value capture, right? So in this example, we're going to do the 50% overnight. So on half the fund, look, there's this interesting dynamic with that, right? So what is the dynamic? So first, I get half the premium for time value that I would have got, but I also take half the risk, right? So now I've got this overnight position that I've only got a 50% exposure to the markets. Now, the markets gap about 14% of the time. If you look back to like 2007, when you really had good, strong, like open close data, it's about 14% of the time the markets gap by more than 25 basis points up or down. So one of the things about that is, if you only have half the position on, you may miss out on like what happened on August 5th. It might be really great. Or you may miss out on what happened last week, the day after the Fed, where the market gapped up 2%, right? You could. So what you have to do is you have to start to make a market call when it comes in there. And then that gets really hard for investors to understand what our logic is. And we could set rules and we could communicate the best we can here. But the 50 on 50 weight is definitely something we've discussed for sure. The question is, do you do it every day? Do you do it sometimes? So more to come there without leaking too much of, what our data is telling us.
Okay. So I guess this is a question for both of you. One of the famous questions from people. What can they do to keep the share price from dropping? I think the first answer, they're doing it on Defiance with the goal of 0.15%. Probably would keep a stable NAV. What is a reasonable mix of reasonable mix? Oh, well, let's start with question one. I'll let you both take that one if you want. What can you do to keep the share price from dropping?
Look, I mean, the most of that share price drop is due to the distributions, the large percentage of distributions, right?
Yeah.
So, I mean, I would almost ask the community here, would you rather the NAV or get less in the distribution, right? The thing about the Defiance funds, right? And Sylvia and I talked a lot at length about this. We decided to distribute what we earned in time decay. It was always about capturing time decay, right? Extrinsic capture. So one of those things is, if we're gonna give that back, we're gonna give all of it back, right? We're not gonna hold back. We decided not to do what YieldMax does or JEPI does, some of the other competitors that hold back the distributions. We decided to give it, right? So that is the main driver of the declines of the NAV. And then, of course, you've got the structure of limited upside, but all the downside. That's a different functionality of this. But the NAV itself, the price of the NAV has always been a function of how much we're paying back in time decay. And we've always just given back what we earned, right, Sylvia? On our meetings, we go, here's the math, what we earned every single day in each one of the funds on just the extrinsic value. And then that's what we decided to give back. But I don't know about you, Sylvia. It would be interesting to hear from the group if they wanted less of a distribution and have less NAV decline.
Yeah, this is always a tricky one for us too. And we also get the question on this of like, why is the performance so bad? And then I'll go back and look and say, you haven't added in any of the distribution. Actually, it's up, 15%, whatever it might be in the period of time where they think it's down 30. And so, yeah, I mean, I would agree with Jay. We would love to hear feedback on that. There are things that we can do, obviously, to stabilize the NAV further. We can always do more reverse splits too, as another alternative. That's not necessarily like a strategy of ours, but we wouldn't let a fund get to zero if that's what anyone's worried about. But yeah, it's like, do you want SPYT or JEPI WDTE? They're just two different funds. So,
yeah.
We can kind of marry them a little bit, but
that's the answer. I think that's the answer, right? If their problem is the NAV going down and they're getting high distributions, then forfeit your high distributions and buy QQQ. Right?
Yeah.
So
I mean, right. The both products are there for that reason, right? I mean, there is definitely some overlap between those two products, but we still wanted to make sure there was a real reason to have two separate products in the mic. Thank you, Normal. You got me on that one. Good one. So
I can answer that.
Different cast.
Wait till October, right?
I love it. Yeah. Sorry. Back to the. Can you just take this one, Sylvia?
Yeah.
That was funny. That was good.
Are there plans to follow sectors such as finance, industrial, semiconductors, healthcare, et cetera? I guess that can go to either one of you.
Yeah, I mean, I think it's to the point that Jay made about QQQT. I think, we'd like to see some growth in this suite of products to see that investors are still interested in them and that there's appetite for this. So, we'll keep an eye on that. And I think if it's there, we'll continue to expand. I mean, we have USOI out, right? And so that's one of our first sector products, is doing pretty well. So if you all want more, we're happy to put it into the market.
Okay. Yeah, I know you have
product ideas. We definitely love that.
Yeah.
You have a couple. I know Defiance has a couple sector kind of related, right? The quantum and the oil. Well, USOI kind of, right? So.
Yeah, we like that one too, by the way, quite a bit. Like, there's some real interesting dynamics about adding in some of those commodity products. We have three others that are filed, right? There's silver, gold, TLT.
Yeah.
But yep, I think again, it's uptake on USOY that I think would help us understand. And it's had a little uptake. It's not zero. It's doing better than Trez. I saw somebody put out a Trez post before. It's doing better than Trez did, which we shut down. But I think there's not dailies on those, right? It's a few times a week, but still, I think Sylvia, you would admit we're thrilled with the way USOY is going, right?
The distribution's been great. Yeah.
Yeah, that one's like kind of surprising. It's up, it's down, and total performance kind of lacking, but hopefully it gets better.
Yeah, I mean, it depends on oil too, right? Like, tell me what oil's going to do.
Exactly.
Tell you what that one's going to do. It looks like a mixed bag, by the way, on the comments on NAV stability versus distribution rate.
Yeah. Sorry. Yeah. If I scroll down, I'm going to lose my place. So you guys are going to have to read it.
I'm scrolling.
Okay. All right. Yeah. So let me go on. I don't know if this is true, but did you know that E-Trade charges $36 per ETF for reverse splits? Is that something you've ever heard of?
I don't know why they charge that. What's the point of that? It's like they don't trade for ETF trades. So what? You should sell it all, then buy it back the next day? Like, that makes no sense.
Yeah, I don't know. I've never heard of that. I guess time to leave E-Trade. See, everyone knows you love Alti.
I think it's more nervous laughter about Alti, right? Like, that one takes the most time for us to manage, and I feel like the results are not our best results across the board. Sometimes it's just better to have a SPY T or QQQT and just get the market plus the distribution. But that one with the 100, I think we did 100% last month, right? That was, or the recently, right? So that is, again, it just continues to be interesting from the high yield perspective, but hard to get that one right. I can't wait till we have more tools on it. I am giddy about extra option tactics.
Yeah.
It is weird, but I am. Yes.
No, me too. I'm pumped for it. What's up with Eurax, Sylvia?
What's up with Eurax? We need nothing is actually up with Eurax. But, so that's a levered ETF on uranium. Tracks URA on a daily basis. So, that's one of those ETFs that. So a lot of times, like the energy and clean energy related types of ETFs are quite volatile, and they become interesting for traders. And there was a lot of demand for this one. We kept hearing that nuclear energy is the future of AI and data centers and iCloud. And then on top of that, just, the move to go to clean energy. And so, and URA is volatile enough. So we put it out there. But I think this is an ETF that's going to probably sit there until there's some major event or major spike. Every time you hear news on uranium, you can kind of see the trading volume in that ETF spike up. And so I think it'll grow as uranium trends upward or starts to be more, popular and well known in the market.
So your ETFs, the leverage ETFs, I'm just curious, generic question. They start off on the option chain as monthly, right? What does it take to get them to go weekly on the option chain? Is it just like, just interest, interest and in general, or do you have to apply for that, or how does that work?
No, market makers have to apply for it. Which, they like on MicroStrategy, I think it happened in like a day or something like that. But yeah, it's just demand and interest.
Okay. Will MSTX, well, we know they won't have options, but will there be a distribution on MSTX? I know some of these leverage funds have distributions.
Yeah. So leverage funds have different types of distributions. You have dividends, which, depending on whether or not the underlying actually pays a dividend, you could have a distribution from that. And then you could have long-term, short-term capital gains, and you kind of know that towards the end of the year. So if there's any kind of like gain or income, ETFs have to distribute 90% of them. So, you probably see the announcement around that. It's not meant to be like an income play or anything like that, though. It's just, it'll literally be like, usually the distributions on levered ETFs are around short-term, long-term capital gains.
Yeah.
And like every ETF company tries to avoid them, but sometimes you can't.
What, the distributions?
Yeah, just for, like traders typically don't want that for levered inverse ETFs. They don't want the short-term capital gains.
Okay. You already answered this. I think it starts well, it doesn't start the 26th. The schedule will probably come out the 26th. The next payment will be the normal.
The week of October. We're going to solidify a date that will
So the October payment will be as normal, and then
this next payment will be as usual. Yeah. And then after that, it'll go weekly.
It'll be weekly after that. So whatever after the 6th, whatever.
Yeah, there's a few questions about that in the comments, and it's right weekly, and it'll be what we make that week. Right, we'll distribute that. Right, there won't be. So you're gonna see some ups and downs. Look, unless we feel like stabilizing the NAV, Sylvia. Right, but you're gonna see some ups and downs, and we haven't determined the process for that yet, because maybe you want to have it as a more not only stable NAV but also a more stable distribution schedule. Right, but volatility changes week to week, so for sure.
Oh, I'm glad I forgot about this. YMAG, the groups. Why are you leaving MSFO like out for the kill
all by itself?
Yeah,
look, somebody had to be left alone, right? I mean, there's 7 of those funds, right? So I think, again, transition period, we're learning through all of this when it comes to that. I think we'll probably, the way that it's when we get the payment, that'll be, so when you get the payment for the constituents, in that case, only one ticker will pay, just Microsoft, and then MSFO, and then that's it. So yeah, that YMAG 1 week will be low.
Can we ask you guys, can we ask the audience, do they care about the weekly distributions? I mean, it appears that they do, based on, what some of our competitors have seen, but like, do you guys really care whether it's weekly or monthly?
So that's like a 50-50 split. And hopefully you guys can see the comments as you ask that, but
yeah.
My opinion is no. Honestly, it's more of a nuisance to me because I track, the payments and everything. But overall, I think people, they just want to get that weekly income. And to me, it never made sense for YieldMax to do weekly, because they do weekly contracts, right? But Defiance, it kind of makes sense because they do daily contracts. So that part, I guess, it makes sense. But yes, people, they want to get paid daily. All right. So, I mean, it's kind of like
the comments here.
Yeah. Like, thank you, everybody. It's great to kind of hear it. So, look, that was a good, Jeremy McNeil's point was good, that it helps pay down margin. If you're using margin, you get that faster.
Yeah.
So I understand. I definitely can understand that point.
Yeah, definitely. I was always scared to touch margin until these funds came out, because it's kind of like, you can make it work for you. But see, this person understands, right? They don't care about the NAV. All right. So again, IWMT, see, it's popular. All
That's
right.
it. So let's do IWMT next week. Sorry, by the way, jokingly, we could do it.
Give me a date. Come on.
That's it. Announcing it here. I'm kidding. No. I mean, it's definitely on the list, right? It's definitely something that we talk about internally. Absolutely.
Okay, I didn't even read this one, but I pulled it up. That's dangerous, right? With 45 days in between misty payments, we get all right. This was already asked, I guess.
Yeah, I mean, you should expect
right?
You should expect that to be made up in that group D.
Yeah.
That might be a monster distribution.
Why are we capped at 5%? Do you guys? I don't know what that means. Do you guys know what that means? No. All right.
Maybe like the level that we're selling calls, or where we're putting the puts on. I'm not sure, right? But it's the market that decides that, right? So that's some. And for those that are new here, because by the way, I've seen your community's growing, Rod. That's great. The there is a give up for the what we earn in those option premiums, right? Whether it's Defiance or YieldMax, like we're deliberately, saying I'm okay giving up the upside because I want to generate time income or time premium, and so that's one of those things where that's the driver of these high distributions, right? Is just the time premium that we earn, and you have to give something up. So that's why, that's why there's the give up. That's the offset.
So I had to pull this up again because it's actually Coach saying it, so it makes it a little more funny, right? So,
thanks, Coach. Appreciate you, man.
All right. Here's an interesting question. Any ETF on the pipeline to be removed?
We couldn't share.
I know you probably can't say.
I mean, that would be breaking news if we could talk about it.
Yeah. I mean,
I can tell you we're not, we're pretty happy with all the ETFs we have out. They're doing quite well. They're holding their own. So
like 6G, well, 6G doesn't even show assets. Neither.
Yeah, it's got over half a billion in there.
Okay.
So that one's definitely safe. That's like our.
Then your X is at the bottom. Then 2 million. All right. And then for J, Babo. Well, YQQQ, I guess, is the lowest, 3 million. But that's enough. Yeah,
Babo got added to YieldMax, so you'll see the assets go up in that one. There's another inverse, right? Like, hey, people.
Do you call it Babo?
Babo? Yes.
Babo.
It's you watch these things and you got to give them a little bit of time, right? I think Sylvia has had a great track record here of, putting out ETFs and keeping them out there. So, trust in Defiance.
Yeah. And by the way, everyone closes ETFs too. I think it's just when you're a smaller issuer, it's somehow louder because.
Oh, yeah. The stat is ridiculous.
It's crazy. Like there's a big ETF graveyard and, we're like
three-quarters of the funds released or closed.
Yeah.
Three-quarters.
Right. So we have a much better run rate than that on our side.
Who?
A 70% success rate.
Who are we talking about?
Any ETF company.
Yeah. Oh, in
BlackRock. You pick them, right?
Any ETF company you look up has a lot of ETFs that have closed, and just when they're huge, no one talks about it because it kind of flies under the radar. But when you're a smaller company and you close a fund, they're like, wow, they had 4, they closed 1, so they're closing 25% of their company. It's just that we're new and our hit rate's pretty good.
Do you wish Trust was still open?
I wish it was open for August 5th.
Yeah.
I feel like it would have been doing pretty decent.
Oh man, salt in the wound on that one, right? Because it was really hard to make the decision to do that, and and then you had the volatility you waited for months. I see Max is on like that. He knows exactly what we went through on that one. It was very. Sometimes just timing is not what it is. I still think it was the right decision because even regardless of performance-wise, it still didn't seem that interesting to the investment community, right, Sylvia? I mean, we didn't even get over 5 million, right, in that fund. So it didn't seem like anybody wanted it, so it didn't make sense to keep it out there. We love the ticker, but we didn't, love the adoption or the performance. And it was hard to understand. It's a perfect example of sometimes you can outsmart yourself.
So YBIT, which I believe the underlying is still BITO, to my knowledge. I guess they're asking how you trade that with such a large dividend, but when it's declared, that's kind of considered in the premium. Right?
Yeah, so this is a hard one, right? Absolutely. So this is the only fund where when it comes to YieldMax, sorry to dig into this too much, because the question's here. This is a hard one because there is such a large dividend. In the options, you don't get paid for the dividends, right? So like when you're a $18 stock like BITO, and then you distribute $1.20 in a month, that feels like, Defiance and YieldMax yields, right? It's really high. The problem is you don't get that in the options. And so while it might be in the put, it's not in the call. So that long call, right? The synthetic short, put, long call, that long call erodes dramatically. Right. So if you notice on the synthetic, when it comes to YBIT, they have a much higher, we'll call moneyness, but a much higher strike than the underlying ticker. So I think we put on 26s this week and BITO's trading at 19. So what happens is we pay very little for the long call, which means Can't only lose what I paid for the call, right? We're paying like a nickel maybe. But the dividend is implied in the time value of the put. So we're capturing the dividend by doing that strike, and as much as we can, and avoiding, what's more important, avoiding the decline of the long call in the synthetic. And then it comes to the selling of the call, right? That weekly call selling. We sell an exchange traded call during the month, except when we have to cross over the ex-dividend date. So in those scenarios, we do a synthetic. Otherwise, you get assigned or you're too close and those kinds of things. So you gotta, that one definitely takes a little more, little higher skill level to manage around the functions of that very, very high distribution. By the way, when that fund was filed, BITO did not have such a large distribution, but now they do. So we adjusted. But again, it's a one-off. Hopefully I explained why it's a little different how we trade around that. That is a special case.
Would it be better to change how that prospectus is and essentially own the underlying, own BITO? That way you actually get the dividend from BITO.
Yeah, that's so. Yes, but no. So the challenge is now you get the BITO fees and you get the YBIT fees, right? So you have this compounding of fees. And so the net fee to the investor is like over 2%. And we think that's not great. So we think that's a deterrent. So, there's complications there, right? So it was certainly an option we discussed. So maybe more to come on that guy. It is something we look at every day. That fund in particular, we look at them all every day. Don't get me wrong, but that one, how do we improve it and capture both the time decay and the dividend are important. Right now, we're outperforming the underlying a little bit, but we'd like to do that by a little more.
Okay, I think you said you can't answer the date, what day of the week it's going to be declared. Is that correct?
Yeah, we haven't announced the dates, right, for the weekly. For the
day now. Yeah, any day now.
Any day now. Wednesday. Maybe tomorrow, Sylvia. I don't know.
Declared Wednesday,
maybe
Friday. Yeah, ex-dividend date Thursday.
Yeah,
there it is. Is it time to buy Ulti? Yes. Not financial advice. All right. All right. Why puts over calls on index funds like QQQY? I presume both would cash settle with 0 DTE.
You want me to take this one, Sylvia? I'll grab this one.
Yeah, go for it.
Okay, so there is again, maybe another example of where maybe we were too smart for our own good, but I still love the solution. So an in the money put is the exact same build as a covered call or a synthetic covered call, right? It's the exact, but it's just easier. It's in my opinion, a more elegant build where it's a single trade, so you save on commissions, and you have the treasuries that are going to pay you some income at the same time, right? So you can have a basket of treasuries selling that one option. If you look at a risk reward chart or a P&L chart of an in the money put versus a covered call, they're identical, right? So why would we, why puts over calls on the index? I mean, selling an in the money call is a different strategy. That's a bearish strategy, right? So we still wanted to replicate a more widely accepted covered call strategy, but instead of doing 3 trades a day or even spending all our money on a deep in the money call, the math told us that selling the in the money put gave you the same income rate as if you were long and selling the covered call, and you get to earn the treasury income on top of that. So that was the rationale for it. It was, we still believe it is the smarter trade for, if you're focused on the income generation, which those funds are. There's a lot of working dynamics on that. We tested a lot of stuff there because you're right. Traditionally, it's why don't you just have a covered call? Why don't you just long the market and sell that, sell that call? We thought, to add a little, elegance and reduce some of the costs and, actually earn some yield while we're waiting.
All right. So they finally cut rates, right? So someone's asking if we can expect lower yields on QQQY, but I assume this question kind of goes for all the funds essentially, right?
Yeah, the answer is the bonds will pay less naturally, right? The
Yeah.
bonds in the portfolio will pay less, but believe it or not, put premiums go up, right? So this is a little weird option dynamic, and it has to do with cost of carry and things like that. Without boring anybody, you might like it, Rod, because it's accounting. But besides that, and nobody else will like it. But I would say yes. So what happens is as interest rates go up, call premiums go up, and put premiums go down. So as interest rates go down, yes, the treasuries will have less. So you'll see a lower SEC yield. That's that part of the on the distributions. You'll always see like an SEC yield. That's the bond income minus expenses. You will have though higher premiums and puts, and our expectation is it should be the same. In a zero rate environment, selling puts was, definitely, you could make more selling puts in that environment because puts had more juice. Puts just had more premium in them because of the cost of carry. So if you want more details, look up cost of carry and option pricing. There's a Greek that nobody likes to talk about, R.o.D. It got interesting now, but we'll see. We'll see how it matters.
Okay. I was kind of pissed. I forgot to ask you on the last interview. Murney was not in YieldMax. What's up with that?
It is. We just put on the option positions in there, right? So look, this was a tax. Yeah, this is a tax harvesting tactic. So Murney was down like 25, 50, 30%. So you harvested those gains by selling Murney, but you didn't remove the Murney exposure. We put on a Murney synthetic, almost the same, not the exact same, almost the same as what was in the Murney fund itself. So you never lost the Murney exposure. We just replicated what was in Murney and put it into YieldMax, and we harvested the tax losses. You will see that tactic happen again for other tickers when the cost basis, when there's like a significant tax loss to harvest in the fund. So we didn't really take it out. We just replicated it.
But what about the distribution?
Yeah, it was all in there. Like that fund. So YieldMax was earning the weekly call premium because we had the synthetic covered call in the fund. So it didn't miss out on that at all. It earned the time decay from those calls that we sold weekly.
Okay, I get what you're saying. All right.
I see you're smiling. You like it. You like that idea.
Getting creative in all the funds.
If nothing else, creative, right?
Yeah. I know. I saw that. I'm like, come on, what is this? But anyway,
now you know.
So they want well, we already have kind of a J bobblehead, right? So I guess they want a Sylvia bobblehead as well.
Please no.
You can premiere
something else to abuse. I get it.
You can be on my shorts. I don't know if you ever seen the little J shorts, but
I definitely have not.
You have not? Go onto my channel and go under shorts. You may enjoy it.
A source of joy for me, Sylvia. Trust me.
This is the last one, Jay.
I did.
You should have worked harder, Jay, on like a heckle here.
That's okay. I know. Glutton for punishment.
Here's the famous reverse split question. This one goes to Murney. I guess Murney and AIYY. They've been under $10. So, are they going to be filing, or are we waiting?
Yeah, so we would always announce if we're going to do a reverse split. The historically the goal on the reverse split is to avoid any time under $5, right? That gets you things like restricted on brokers. It takes you out of other holdings, and so you don't want to go below that. I think we're giving the spread action a little more time to kick in to see if we could capture a little more upside on the NAV. But look, if AI drops another 20%, there's nothing AIYY could do about it, right? So it's one of those things that, the underlying has a lot to do with it. We think we're going to offset some of the cap on the NAV by using the call spreads. So, there's no rush here to see what's happening. We used spreads in AIYY last week, and I think things look pretty good in AIYY. So, we'll continue to watch that, but there is no announcement. There's nothing I could say here. Because I think we're going to give it a little more time.
Okay. Thank you, Henna. All right. He cares nothing about NAV erosion. especially when the total return is positive. The only thing keeping him awake is the drop in assets under management below 100 million. I don't know what that's directed towards, but you know, some of your funds, I guess. Well, Defiance, last I checked, they were up 1 week, then went down the next week, and then YieldMax is kind of all over the place. Well, Tesla's up and down, but I don't know. Any comment? It's not really a question, but any comment to that?
Yeah, like we said, Sylvia, I don't know about you. I don't think anybody would shut down a fund that was, trading with 50 million, right? So I don't, there's nothing like that.
I mean, funds that get shut down are like, a couple $1 million and don't trade at all, no volume, no interest.
So like 2 million is the number?
There's no number really. Cause I mean, the good thing about, I don't know if it's good or bad, but the good thing about like smaller types of shops like us is that we don't have massive amounts of seed. So all of the money in the funds is actually real money in the funds. Meaning that like a lot of new issues come out and someone will put 50 million in and it'll look like a super popular ETF, but it's actually seed and we don't have that. It's all organic growth. So if an ETF is, as Jay said, like you're talking about 50 million, I mean, most ETFs break even around 20 million. I won't say all, but like ETFs like this that have a little bit of a complexity and the management fee that they have and things like that. I mean, they tend to break even around 20 million. And like if an ETF is close to that, you want to keep it going and get the word out and get more people invested in it. You're not thinking about closing it.
Okay.
And also time, right? I mean, these are arguably new products, especially QQQT and SPYT.
Yeah. So, all right, let's see this. Why Tesla today when Tesla's too, I guess, question about capping, but I don't think it hit the call spread area, right?
No, Tesla has spreads on. We put spreads on Friday. So today was interesting, right? So I think specifically this is hey, why would you do it when you would do it? So yeah, so the answer here is the option chain is going to tell us when it makes sense to do it. If it's expensive to do the call spread and we can't capture our target income, then we'll step away from it. Actually, believe it or not, sometimes like the higher volatilities like Misty, like the MSTR options, it's like sometimes it just doesn't make sense to do that. To do the call spread, right? You'd rather capture the upside by selling that call farther out of the money as opposed to just going into the short call spread. So look, I think I'm looking at Tesla versus Tesla today, and Tesla was up 4.9, Tesla was up 4.1. That feels like pretty good upside capture, right? That seems so far to actually have a pretty positive impact on doing the spread. So actually, Rod, this is something for you. If you look at the holdings of Tesla right now, there's a small piece that is just a short call, right? And then the big chunk of Tesla is a call spread. Those two options that we have, let's say the spread versus short call, that's the exact comparison to what having a call spread versus a call would be. We didn't do it on purpose, the way that it worked out, the way that those trades went in. One was just the short call, one was just the call spread. But watch the performance and the impact of those two pieces. If you want to see the real benefit of call spreads, that's the way to watch it. Or you want to see the detriment of call spreads, watch those two individual positions. I would say it's even worth calling out exactly that comparison of, and I know it might only be for a week, but just watch those two positions and see what their impact is. You'll see the potential benefits or not benefits of having the call spreads on. So it's like a little experiment there. We didn't do it on purpose. It worked out that way. But, on Friday, we put them on. Today, the call spread provided a little extra benefit than the short call, meaning the short call is starting to get bigger and capping gains, while the call spread capped less today. You have another update tomorrow like this. You'll start to see additional gains in that from the spread side versus the short call. So like it's a real good, you want a real-time experiment to watch one versus the other. There you go.
Yeah, I've been tracking these and I'm sharing my screen. I'm not sure if you can see it, but, how the calls, like this one, oh my God, like it closed right at the money. So then obviously
Yep,
tomorrow.
we got pinned on that one. That's okay.
Yeah,
it happens.
Exactly. And I noticed for the 1,315 contracts, you did not do a credit spread.
That's right.
So
watch that one. Watch the daily change of that versus the daily change of the other two. Right. So keep an eye on those.
You're right.
All right. That one's worth like a little, deeper dive if you ever really wanted to show people what the benefits.
People complain my videos are long enough, so I can't.
All right. Do a special one.
Okay. Let's see.
The other comment about July 11th, we didn't have spreads, right? Spreads are really new, so probably would have done it earlier.
Big payment just split into 4 weekly. I don't understand this.
Yeah, we touched on that one, right? The weekly payments. We think we don't know.
Oh, that's for you. No, it says Defiance.
It says Defiance. No. I think it was meant for Defiance, right? Are we just, we're gonna distribute. The plan is, to distribute what you earn in the call premium
the prior week, right?
Yeah, I mean it seems to make logic sense. We haven't announced that yet, but it seems to make logical sense.
Here's Max.
Thanks, Max. Appreciate you.
It's on the weekly train. I don't know what he's missing.
Yes.
You may be a little delayed on the comments, man.
Yeah.
It's all right. It's all right. You're doing your best. I get even garbage about something.
Yeah, I need someone else to do this, right?
That's right. So it sounds like you had a helper there earlier. Maybe he can help out.
Yeah, yelling and screaming. No, the StreamYard, you scroll and you can't tell when it gets to the bottom. It always just shows, and it's I don't know. It's good enough, I guess.
There's some good ones in here.
Could we ever expect a 20? Well, no. The answer is no to that. I can answer that one.
Yeah, Target 20 fund.
We kicked around putting that in the name of the fund, right, Sylvia?
We did, yeah. I think. I mean, we
20%.
wanted to. I think that, I'm not sure if we were able to. I know we're still kind of interested in doing that, but we thought it might make a difference if somebody saw Target 20 in the name. But
that way, you don't get these questions, right?
Well, it's not even about getting the questions. I think it attracts people who want.
Oh yeah, it'll stick out.
Yeah, for sure.
You still could do that, right? So.
Yeah, that's regulatory stuff.
Do you use charts and price actions, Jay, to determine a bias or strictly IV?
I mean, all of the decisions. There's a lot that goes into them, but it's almost all the implied volatility. I will say for the spread decision, we might look at price action of the underlying, right? Because the first and foremost thing you don't want to get with the cover call strategy is whipsawed, right? So you that is ultimately a price function, right? Google was a good example, right? The prior week where Google had hammered one day, same thing with JP Morgan out of the blue, down a big amount. And it just happened to be the day we would have put a new short call on. But instead, having the spread tactic, we used that instead and then captured a lot more upside. So that happened with Apple to us. That happened with like I said, Google. So it's not so much the distribution is still always determined by the implied volatility. We let the options market define that for us. That makes the most sense. But when to use a spread or not to use a spread, there's definitely some market action involved in that decision, again, because you just don't want to be capped and get whipsawed. So that definitely counts. When it comes to the Defiance funds, we don't make those are one-day trades, right? So there's not a lot that you can do. You have to make a guess on the next day, which, hard to look at a lot of trends to figure that out. But
SPY-T, well, they're not going to weekly. Are there any plans to have SPY-T go to weekly?
Not at the moment. I mean, I think we'll see how the weekly distributions go, and if it's something that everybody loves, we could always do it.
And this Kevin's going to help you out. He's going to buy some more QQQT.
All right, Kevin.
We appreciate it.
Thank you.
What is the logic to determine? Well, this is a good question. So return of capital 19A1 notices that are posted on the website. So those are always estimates. But is it a requirement to put it up every month? Is it a requirement at all? Or technically, could you just wait to the end of the fiscal year and then just give us the number? Or if it is if you have to file it, how do you determine it? I assume just current income versus how much you paid, and you just put it up for return of capital.
Yeah. So the return of capital is determined after we announce the distribution, right? So it's not a function in the amount of the dividends and the distributions, right? We have always leaned on just distributing what we earned in the extrinsic, the time decay of the options. I know I'm like a broken record with this, right? But there are times then where, because we distributed, let's say we made money in a covered call, or even like how we make money daily, no matter what, in time decay in the Defiance funds, the fund could still lose money, right? The underlying trade could lose money, like each one of those settlements. Like if the market's down, that in the money put will settle at a loss. But we still made time decay that day, right? The fund lost less than the market. So when we have a distribution, you had a realized loss, but you still paid out. That's what defines the return of capital calculation. When you have one of those within 45 days, if you had a loss but you still had a distribution, you must post that 19A1 form. So it's a regulatory requirement that has to happen. I'm not the one that does that or does that determination. Our administrator title does that. But the point is, it's meant to communicate so you know how to budget on a monthly basis, what to expect to pay in taxes or what you had in income from the fund. It's actually, I think, a helpful thing. But the return of capital is really not included at all in the distribution calculation for any of these funds.
So did you say it was a requirement to post 19A, 19-1A?
I think it's within 45 days. I think that's the time frame.
Yeah, that's right.
Of the distribution?
Yep.
Okay. I'll have to double check that then.
We'll bring on our experts. You do your thing. We'll figure it out.
No, do people actually check that? Like, they go to your website?
Yes, I get calls about it all the time. They're like, where is it on the website? On our website, you click on the ETF.
That's someone's job.
All the way down to the right, and it's there.
Wow. It is someone's job.
I'm going to get that job.
You'd be good at that job.
Yeah. All right. Scrolling through, I'm getting towards probably not the end, but will Tesla split again? Yeah, that'll kill. Of course it will. All these funds will eventually.
Look, it's just, it doesn't change the value in your portfolio. I know it has a negative connotation, but it's just, instead of having, $5 in your pocket, maybe that's a bad example. Instead of having a $20 bill, you have two tens. The value is the same, right? So you had two tens, now I'm going to give you a 20, right? That's it. It's yes, you have less bills in your hand, but it's the same value, right? And the distribution changes as such, right? That'll also, if in that case, double, right? So, it's not a negative thing. I know that it has this negative connotation because historically, when companies had to do that, it meant they were in trouble, right? Their stock was bad. But for options-based ETFs, and even just a lot of ETFs, this is very common. It's not awful. But I understand the negative optics on it, but ultimately it does not hurt your performance.
Yeah.
Unless E-Trade's going to charge you $100, then there you go.
I always say, by the time you get to that point, the damage is done, right? The fact that it went down in price that much, who cares about a reverse split? I care that it went down to that, down to that level. But obviously, most of it's involving, the underlying.
Yep.
All right. Sylvia, QQQY, JEPY, IWMY have decreased its assets under management by 30% March 2024. Is that a concern for investors? I'm not sure if that's true, but if you want to comment on that.
Yeah, no, it's not a concern for investors. The funds are still large, healthy, profitable funds that we continue to invest in and hope to continue growing. We saw a little pickup after this last dividend too. So it seems like the investors like the juicy divs.
Oh yeah,
yeah.
that
So
made
I
some
think
noise. That was nice.
help us out. And
that right. That was capturing the August volatility, right? I know it just took a little while for everybody to see it, but that was what that was. It was the market got a little nutty in August.
Yeah, that was a good surprise. I'm gonna say the R word. What's your opinion on Roundhill, the strategy that Roundhill uses? You don't have to comment if you don't want, but
they're different. Oh, sorry, I sneezed. Let's move on.
Yeah.
Like they're more growth, right? They're selling 10 delta calls. Like if you track the amount of premium they're selling each day compared to say what like QQQY or even IWMY are selling, it's smaller, right? So it's more growth oriented than it is income oriented, right? They're selling similar to like QQQT and SPYT, like around 10 bips a day, sometimes less. So, that it's a different approach. I know everyone throws all the income and zero DTE stuff into the same bucket, but they are different tactics, right? It's a little more growth, right? Not selling overnight and selling in the morning means you're giving yourself the opportunity to capture pops, gap ups, but also not earn the overnight decay. That's a directional bias versus, the strategy is it's just a little different.
Yep.
I think, the target products probably are a better comparison than say QQQY or, WDE.
Yeah.
What is our ticker that I don't like? WDTE, our new ticker. You know, I'm really mad about that situation.
You don't like it? You don't like WDTE?
No, I do. I like the ticker. Don't get me wrong. But I don't like that we changed the ticker.
Oh, yeah.
Wish somebody would really investigate that and talk about that besides the two of us.
Well, can we talk about that?
No,
we can't talk.
No, but somebody could ask that question. If only.
Investors. All right. Yes, Max, right? You want to answer him?
Yeah. So sorry, Max, you might have missed what I answered earlier. So it was only because now we're moving to the weekly distributions. It might be a week of low vol. And so we're still going to target the 25 bips a day. We're not really lowering the target. We're still going to sell the same delta option. It just that 60 delta though on a really low vol week may not capture the 25 bips from before. So I lowered it to 15 because I didn't want to, like, hey, where's my 25 bips? It's like, it was a week of no news or it was a 13 VIX. Whereas before we had a month, right, to get to that average number. And I've always got some, funky, some kind of news every month, right? Jobs number, GDP, CPI, or a Fed meeting or earnings, right? To capture that extra juice. But now moving to weekly, you don't always know if you're going to get there. I don't know, we'll see what the impact is on the distributions, but it was more of accommodating the fact we're only going to have 5 days to generate the income versus 20 before.
Are you guys using credit spread to capture some upside on the long or to use less collateral?
It's all about capture.
All about upside, right?
Yeah.
On the target funds, we use credit spreads.
We do. Yeah. And so in that scenario, we don't limit the upside capture, right? Again, spreads are good to kind of define where you're making your income and, leaving the upside to go, right? Again, spreads for upside capture. We kicked around, Sylvia, right? When we started talking about the targets, we said, okay, just sell far enough out calls that you're going to only make the 8 basis points a day. But then we said, no, we want to have a bigger growth component, bring it in a little, sell the spread, uncap the upside. But we did talk about selling again, the 10 delta call instead of selling the call spread, right? So we thought more upside capture when we could made sense. It also complemented the product suite.
Yeah, it delineates the two products as being different, right? If you start getting into 30, 40%, because a lot of people said, like, I wish it was 40 and not 20. But if you wish it was 40, then you probably want, the other one.
Yeah, right. Buy a little of the other one. Create your own mix.
I guess this could apply to both of you. But actually, I don't remember if Defiance. I think no. Defiance overnight, like after midnight, are your trades still there? Your intraday trades? Sylvia, do you know?
Oh, like when they're posted on the site?
Yeah, because YieldMax, you know, if God forbid I fall asleep and nothing's posted before bedtime, right? I wake up, they're not there anymore, right? So I don't know. I think Defiance holds them, but they're basically asking, can you store all the trades for us in a CSV file? I know the answer.
I don't know. Are we allowed? I don't know what we're allowed to do there.
Yeah.
You can post them.
Daily.
But I think those are there till 4 a.m., right?
Yours aren't. No, midnight. I think
Defiance are gone at midnight.
Yeah.
No, ours are there.
No, Defiance, I think, is
there.
When I tracked it, that's what I remember.
In the morning,
Yeah.
so
yeah. YieldMax is not, because I remember one time they didn't post it till after like 10 p.m. and I woke up early and nothing.
Listen, sometimes the world's an imperfect place, man. I don't know what else to tell you.
No, but I found someone. It's a really cool website. He actually does it automatically for me. But anyway,
Nice.
I had a question on where to go. Spy Tea Weekly, no. All right, so here's so you've been doing $10 up, on the call spreads. They're saying why not 5? Obviously, I think it's based on how much premium you can make.
Yeah, it's on the chain, right? The Apple one was $2.50, right? It's not anything on purpose there. It's just the way the chain works out.
Okay. All right. So I know we said 90 minutes, so we have 15 minutes. I'm just going to scroll to the end, and I want to give you guys time to ask the community questions. So I'm not sure if you even want that time, but if not, we can just continue. But do you guys want to ask the community? There's 432 people, it looks like, online right now. So did you want to just ask some questions for the community, and I'll pull up the answers as we go. We can.
I saw some of these guys kind of scrolling through, and I see different answers to this, but it would be good to have a mass response. Is there a particular day of the week that you like to see this dividend, or would like to see our specific?
The weekly payment?
The weekly payment from Defiance specifically. Okay. I saw a Wednesday, Thursday, and a Friday out there, so curious to see if there's any.
That's a good question, Sylvia, right? Because it is, if we're already making the change to kind of meet the request of our investors. So
might as well pick the right day, right?
Yeah.
Wednesday is fine.
Wednesday. A lot of Wednesdays, every day, some Friday.
Every day, yeah. Just make it every day, every hour.
Every day. I think.
It's funny because we have these comments, right, Jay, that some people are saying why are you guys overthinking this? What? It doesn't matter. Anything, just pay the thing, and then and then we'll kind of hear oh, it has to be this day, or it totally matters.
Yeah, exactly.
How surprised are you guys with the push for weekly income, like weekly distributions? When you got into this, did you have any idea of this need?
I didn't.
No.
I didn't.
No. Okay.
Yeah. That's okay. Look, this is, listening to the investors, I think is part of it. So he's been in this business, ETF business, a long time, right? You want to keep your investors happy where you can, but still stick to the objective of the funds. So per day. Look at this. A lot of dailies.
Yeah.
Could you imagine?
We've talked about this before though, but I think that I think the world has changed. Social media has obviously been around forever, but this focus on specific ETFs, specific ETF companies, what they're doing, what they're not doing. I can't even tell you and Jay is the witness for this. We have a weekly call and we discuss what is everyone saying out there? What are they asking for? So I think the power of all this stuff is massive. We actually change our strategies and our procedures based on these group thinks sometimes if they are a good idea. So
okay, so I think the majority was Friday, it looked like, but so if that helps, Friday's payday, right? And I tell people, in the real world, you don't get paid weekly, right? You have a job, you typically get paid biweekly, right? So,
Yeah.
but I did look it up. It's kind of close though. A lot of people still do get paid weekly. I was surprised with that. So
I see more. I don't know. I might see more I don't cares in here.
well, I don't know. Each community is different. I don't know. There's certain, although it's a lot of the same people, but it varies. My opinion is I don't care either.
Morning, noon, and night. I like that one.
Okay. Other questions? Jay, you got a question for the community? I know you talk to the community all the time, but if anything come to mind, or
I guess I would ask, maybe understanding a little bit more of the perception, because you brought up the Roundhill funds, right? Is it been more interesting for the that upside capture because the market has been up, and I think that has a lot to do with the recent interest in the Roundhill funds. In a down market, does the community understand how? I mean, hard to say do you understand because I'm going to give you the answer, but like, do people get the growth difference between the income, and I guess which one is more important? When I look at where funds are flowing, we haven't seen as much into the targets. We see more into the higher yielding products. But over the long run, I think there is this chance that markets do go up more times than they don't, and so I think it's one of those things that I guess I'm trying to determine here, like, do we really need to make an adjustment between those two funds that we have out there, whether it's QQQY and QQQT? Are we missing something between those two that the community is looking for from just a product perspective around the equity markets, right? So that's that's always been we let people build their own. It's like a little Chipotle here, right? I'll take a little bit of that and some corn salsa and not the tomato salsa. Or you figure out what it is you want in your portfolio with these different products. Yeah. I guess that's the only thing I was curious. Like, what are we really missing here? And is it better to combine the two? Right? We've kicked that around. I don't think that we're seriously considering that, but it's just one of those questions that would you prefer to have, the growth aspect or the income aspect? And I think that's a preference.
So
I was curious to hear that.
So your question is what
growth or income?
Well, yeah, you kind of have, both. Well, you don't really have growth. You have semi-growth, right, on SPY-T and QQQT with good income, right? And then you have QQQY income, right? So are you saying, is there something you want in between, or is there something maybe even under SPY-T, which would yield 10% and more growth?
I don't know. Like,
I see a lot of both in the chat and in the feedback.
Yeah. I mean, Sylvia and I talk about leverage from time to time, right? It's always on the docket. It's something that we kick around, right?
Yeah. You need leveraged use one of the triple leverage indexes. Well, there's 3, triple leverage indexes. I know Sylvia, you said they're grandfathered in. So use those and then do daily puts or daily calls or something like that.
That might require a strategy change update.
That's a different.
No, that's another fund, right?
That's another fund. Yeah. Yeah. I don't know. It's just trying to figure out the way to look. We want to give people what they're interested in, and certainly we've heard the frequency of the distributions. We've heard the NAV stability comment. So do you modify the strategy or do you stick with what you got? But a lot of folks still really like the higher dividend rate, the higher distribution rate. So to me, that's important to make sure you're still servicing that community, right? So.
I think this is like the main answer, though. They want income with NAV stability, but I think they get that with SPY-T and QQQT, right? So that's my opinion, at least. I don't know. But again, everyone has a different answer, but I think that's the majority, right? Because everyone freaks when the NAV goes down. And thank you, Jeff. So, all right. So your question was, what are we missing, right? What else can we make?
That's it.
So,
And we got a lot of great feedback here. I saw some VIX requests. Definitely saw that. I saw
that S-Vol, compete with S-Vol, right? Because there's no one else. So, Sylvia, do you have any other questions for the community?
No, I think I'm reading through the chat. It's great. There's so much information here that we haven't gotten to.
Yeah, this is why I can't keep up, Jay. All right.
Yeah. That's why I'm kind of, probably looks like I'm looking off to the side. I have my chat here. And
I know it's just like, but
but
Defiance needs more funds. I'm like, you guys need some more funds. So anything, any ideas?
Much more funds than we have in the history of our company in the last year.
How many more? How much you put out last month, Sylvia?
And we're like up to 17. So this is like for us.
She loves the leverage funds.
This has been a big launch year for us. So
okay, how about merchandise? People love free merchandise. When are you guys going to offer free merchandise to the community?
Did you say free? You're breaking up. The video is breaking up. I don't know what happened there.
Hey, we do pay you, all right? We do give you that.
I've said this before, but I got, I think, only one address from you, and we actually mailed that person a QQQY hat. So if somebody, if you want to email me and tell me I want a QQQY hat, we'll see what we can do.
You're saying one person emailed?
No, I think we did this like a few months back, and I think I got a name from you specifically. Like, didn't we have like one person? I don't know if we picked a winner or if just maybe we picked a winner, because that probably sounds like a low number. But.
Okay, I have to think of something. If you guys come up with anything creative, that is easier, or just maybe just have a person.
Actually, that's not right. Somebody emailed me after seeing this and asked a question and asked me for some merch. So that's what it was. But you're all free to do that if anybody wants one.
Okay.
Jay bobbleheads for $5.
He's like, no, nothing free.
We have a side business.
Oh yeah. See, everyone wants the bobblehead. So you guys gotta, Sylvia, if you make a bobblehead, send it my way. You'll be on the shorts in no time. And then you and little Jay.
Yeah. I'm not gonna ask, never mind. I'll keep my bobblehead to myself.
YieldMax tattoos. Do you have one, Jay?
If I did, I'm not going to show you where it is.
Okay. I guess that's it. Unless you guys have another comment for the community or a question. Obviously, I skipped over a lot of questions to get to the end, but I think we covered most of them, hopefully. But any other questions for the community or me?
Yeah, I'm still it's tough to even just scroll through and keep up. This has been really great, as always. Thanks for everybody's comment. It really helps. We appreciate that.
It's just, this is like super helpful. It's great information here on the chat and feedback and comments, both positive and negative. It's good to understand some of these things for us. So.
Yeah, I know we couldn't go through all the answers, but obviously the video, you should be able to pull up the live chat if you guys did want to see the answers. But no, I know you both asked about exporting, but as far as I know, you can't do that, unfortunately. But
you can copy.
But anyway, I just want to thank you both. On behalf of the community, on behalf of me. Obviously, I know it's you guys don't probably do dual interviews too often, but thank you for agreeing to do this, and thank you for your time today. And joining Retire on Dividends community. So we're all big fans. Keep it up. Keep that high yield, 100% minimum. All right.
Got it. You got it. Keep it up. Thanks.
Right.
Really, thanks for having us. Thanks, everybody. Appreciate it.
Thank you. Thanks for having us.
Thank you. Thank you to the community. Take care, everyone.
All right. Take care.